Chile is the largest copper-producing country in the world. So for more on what that means, we're joined by Bank of America Merrill Lynch Head of Metals Trading, Michael Widmer. He joins us on the phone from Paris. Michael, what does this actually mean for the copper price short-term in terms of volatility and the absolute level?
Look, I think, as you said, Chile is the biggest copper producer, producing around a third of global copper production. I think we have lost a lot of copper supply already this year. Actually, we are down in terms of copper mine supply. So really, it depends on how long those disruptions last. I think the longer they last, the bigger the impact will ultimately be. I think Chile is just too big a market participant to disregard any unrest completely, I think.
In terms of how tight the market may actually be already, I have a chart for you that shows canceled warrants on the LME. So basically, if you're taking physical delivery, that means you give a canceled warrant. That's actually been rising as a percentage of overall inventory. It's about 45%. Is that real demand, and is the market super tight, or are we looking at sort of moving inventories around the globe?
Yeah, look, I think warrants are not necessarily the best indicator, I think, for fundamentals. But when you're looking at mine supply, actually, there is a set of indicators called treatment and refining charges, and they have actually been falling for quite a while now, and they do suggest that at least mine supply is actually quite tight. Pity though, because global demand is just too weak to make a difference. I think if demand was just a little bit stronger, I think copper prices would potentially be much higher compared to where they are right now.
Well, where is the incremental demand going to come from?
And that is exactly the issue that we have right now. At the moment, is unfortunately not coming from anywhere. China is still relatively subdued. The U.S. economy is slowing, and Europe is basically not growing. And that is the underlying issue that you have. I think from the supply side, the copper market does actually look quite good. If those three regions were accelerating, I think you would have a decent chance, I think, for copper prices to rally. I actually think copper is the proxy trade on all of the macroeconomic issues that we are facing at the moment, and those are effectively what is holding copper prices back. Again, reinforcing the supply side is actually very supportive to copper prices at the moment.
So it really reminds me also of what we see in the oil market, is that you have these macro headwinds that tend to weigh, say, on the spot price and even lower down the curve. But then you have these geopolitical risks that come in that should send the spot price higher, but it doesn't really happen. What should the price be? Are we at the right value for copper?
And I think the price where it is right now is actually from a spot market perspective, and where demand is fair value. I think when you're looking at the price that you need for the mining industry to actually invest in new mines, we are at least 15% below that level. And that means longer term, you're probably not having the supply growth that you need to keep copper mine supply increasing on a sustainable basis.